In this video series, guys, we're going to look at developing patience and knowing when to trade. Stay tuned. Hey guys, a warm welcome to multi-part video series again for you, and today we're talking about developing patience and knowing when to trade. I've touched on this subject before. If you're subscribed, by the way, I appreciate your support. However, I want to go into a little bit more depth now. I want to kind of put some slides up there for you and kind of give you a kind of mini overview of what I feel about this topic. So, developing patience and knowing when to trade. So having the patience and knowing when to trade is such a fine art, right? You don't want to wait too long because you're going to miss the boat, and you don't want to dive in straight away because having that impatience means that you're trading when you shouldn't be. And that, for me, is a big thing that is always in the back of my mind. It was something that was very, very prevalent, the impatience, the desire to trade, scaling it back and kind of thinking about, well, you know, every time you trade, you're risking capital. So why would you want to trade when there isn't a positive expectancy, or we believe there's a positive expectancy? And so this got me thinking quite a lot before, and this kind of comes from studies I've done several years ago, but often revisiting things and kind of reinforcing and adjusting and tweaking and looking back and kind of seeing how I kind of approach things and trying to improve on it. Especially when we kind of got volatile markets as well. I mean, the moment I'm filming this video, we've got extremely volatile markets. There's a lot of opportunity, but it also encourages you to trade because you see volatility, right? I've done a video specifically on that. We see volatility, we want to get involved in it, we want to make money, right? That's what we want to do. We want to get in and make some money. We think we're going to make a killing. And in fact, patience for the correct setup, the correct strategy is what will yield the most money, because the volatility is great, because if we get the right strategy, we get the extensions that we want. We all love as traders, especially day traders kind of pushing to swing trading level, so day trading, entry, swing trading. Then we have that good combination. Whereas if we go in all the time, we end up like losing, winning, and we're getting tired and we don't wait for the more opportune moment. Okay, so let's have a look at some of the kind of things that are kind of reinforce the behavior of having patience. So the thing is to say to yourself, listen, I trade when I have an edge. Full stop. Period. Done. It's an overused term. I recognize edge is an overused term, but that's it, right? We trade when we have an edge. Now, you may be at a stage in your trading where you haven't got a clearly defined edge. That needs some work on it before you push ahead. Even if that's one strategy or whatever, or even if you believe that that is your edge, it doesn't necessarily have to be proven yet, depending on where you're on the trading journey. But just saying to yourself, you know what, I only put my money at risk when I believe I have a positive expectancy and my edge is there. So I trade when I have an edge. Big thing, up on your screen if you need be. And now, my edge is either this. One, when institutions are flowing money into or out of the market. Or two, when retail traders are trading emotionally. So think about that for a second. This is broad, and we're keeping it broad for now. And this would change for you personally. It could be your edges when this specific pattern comes up. But for me, when institutions are flowing money into or out of the market. In other words, perhaps we've had a earnings call or an earnings announcement or release, and then we've had big money flowing in or out of the market, and that generally will be institutions, because they are the ones that generally will reposition and restructure their portfolios based on the earnings that they see or based on news they see. So that presents an opportunity, and there are strategies and setups that fit into that. The second one is when retail traders are trading emotionally. So, you know, if we have stocks that are kind of spiking irrationally, or we have even on an intraday basis, like we have a lot of retail traders kind of chasing lows and buying highs. And I recognize it's a little bit blurry because it's not necessarily retail as an institution, but the point is emotional order flow. Perhaps you could drop the retail traders bit, but emotional order flow. So when institutions are flowing money around the market, I believe there's an edge. And also when retail traders are trading from an emotional perspective, I also believe that there's an edge. So things like continuation trades, buying pullbacks, you know, with that money flow, It's selling fake outs. So that's really the retail traders trading emotionally, i.e. they're getting stopped above those highs, fading those highs for a roll back in. There's some of my favorite type of trades, buying those exhaustion flushes where people just can't take any more pain and they have to come out, that kind of stuff. So it's, for you, it'll be defining, the one thing that's your edge. That could be a specific pattern. It could be trading the open of this and that. It could be trading a gap. It could be trading currencies after a significant event. It could be trading currencies in a quiet period. Whatever it is, it doesn't matter. The point is, it's defining your edge. I trade when I have an edge. My edge is this, or it's just this. Once you've got that, then you can move on to the next bit.